Well, good afternoon again, everyone. Welcome back to the channel. So we're starting right on time. And the easiest way for me to be on time is to set the time at a time that I'm actually ready to go live. So then it's perfect. I can't like not be on time. So I think I've learned now what to do. Anyway, so in today's video, I actually want to talk about the Square Yield Max Fund or block. Um, which is paying dividends that are so lofty, they're actually not so square. They're really cool, more than cool. They're like over 100% annualized. So I want to do some hypothetical scenarios, and some. I've done some spreadsheet analysis that I want to go over with all of you all, just to show. Um, some of you may think these are some ridiculous examples, but I mean, like from a textbook standpoint, these could be feasible if, like they say in finance class, holding all else equal, which is one of the favorite. Not only in finance textbooks, but in econ textbooks, it's one of the favorite sort of disclaimers that they say. So with that being said, let's dive right into the spreadsheet. And since we got a $2 and almost 15-cent dividend from Block this last month, I decided to put together just some hypotheticals. And I want to emphasize that these are just for entertainment purposes only. So obviously the SQY fund, which is one of our favorite ones now because it paid like the highest dividend on record, I believe, for a yield max fund, is obviously uh, correlated to, or not so much correlated, but it's based off of the block stock, formerly known as Square, with ticker symbol SQ. So I did some hypotheticals if you had put $10,000 into both of these at the October 23rd lows. And with that, if you had put $10,000 into Square stock when it was trading at a price of $40 or a little over $40 a share, and you would be at a 72% gain in just a little over a month, really 5 weeks. If you think about it, you'd be at 72.53% in the stock. Now, I did some hypotheticals here. If the stock was to get back to its former glory, so to speak, um, and it even surpassed that, we would be at, and that reminds me, let me actually go in the voice chat here in the Discord. I just heard a little beep. So let's go here. That was perfect serendipitous reminder. I want to also live stream in the Discord. So, all right, general. Okay, so I'm voice connected in the Discord as well. So any brave souls that are willing to come one on one and talk to the coach live, you're more than welcome to. So let's see how we do today. We had an earlier live stream, actually, two in one day. Crazy, right? No comments on that one, but we actually do have one comment on this one from me, of course. But wow, only 7 of you. A bunch of you dropped. That's a bummer. I'm gonna go cry now. No, I'm just kidding. I won't do that. I'm tough. Anyway, not to say you're not tough if you do. So if Square stock got back to $350 a share, we would be at 86,800. If it got to 400, we would make 100,000. We would 10x off of our initial $10,000 investment. And then if it got to $500 a share, we would like 12.4x our $10,000 investment. Now, here's where we would be if we had bought SQY at the October 23rd lows. We would have 562 shares, and at a price of $25 per share, which it's at today approximately, we would be at $14,050. So that would be a 40% rate of return, notwithstanding or not even considering the dividend. Now, the 52-week high for this one was 26.19. So at the 52-week high, we would have made a 47.2% gain at $14,718.78. So the dividend we got of $2.14, 214.63 to be exact, which rounds up to 215. If we had reinvested that at a price of approximately $25 a share, we would have gotten about 50 shares. Now, the interesting thing here, if we annualize this dividend, that would be over 100% dividend. So that would be 103% and change, which is just insane. So that would garner us an additional 600 shares a year. So basically, and this is where some of you might say some of these examples are a bit ridiculous, but this is just again for illustrative purposes. If this somehow did sustain itself, I think this is what excites a lot of you all about yield max, is the potential for these potentially life-changing gains. I think, I mean, a lot of not just in the finance space, but on YouTube in general. I think what trends is ways to make a lot of money very easily, right? That's kind of like the American dream in a way. So in this case, your 562 shares, if it just gets back to where it was before the ex-dividend, $26, and just saying the price holds at $26 over, like, let's see, year 1, 2, 3, 4, 5, 6, only 7 years, not even 10 years. Actually, in this case, in 6 years, if all of this held, like, this could grow to, like, almost $1 million. But then because of the compounding effect, and this is why I like to do these videos, because these are also an illustration of the compound effect. We're almost doubling because it's like 100% return, which I can almost assure wouldn't sustain itself. But this is nice to look at for illustrative purposes. That's why I do these. It can kind of get us excited about investing. So, by the end of year 7, I mean, look at that, $1.87 million. I mean, who wouldn't take that? So, with the compound effect, those are the types of things that can happen, and that's how rates of return can magnify very quickly. So we got a howdy from Denny Keaton. That's cool. So I just really, since we got this awesome dividend from SQY, which more than likely won't sustain itself, but if it did, if it was able to maintain that payout every month, of course, you're probably going to have major NAV erosion and all of that. But like I say, for illustrative purposes, I just thought I would throw this out there. Like, this is where things would be if all else stayed equal, so to speak. And then Blake actually is talking some good sense here. He said, "This looks like another one where it's a good idea to spend some of the yield on protective puts." That's actually a great idea. But again, like I say, all of this is just for illustrative purposes. Definitely consider. Blake, if you have an example trade, definitely, if you want to put it in the comments real quick, I'll go a few minutes longer here on the video. But if you just want to throw something out to the audience in terms of like what expiration and what strike price and stuff like that they could look at, um, that would be good too, because I haven't actually researched that at this point. But anyway, so you all get the idea. Usually I make these into like short videos, but I figured I'd just go a little more long form today. And we're after 4 o'clock, so let's go ahead and review how our favorite funds ended up today. So we'll stop the spreadsheet. And I brought the spreadsheet analysis back, by the way, because a lot of you have been asking me for that for a long time. That's kind of what really started to grow the channel to begin with. So, all right, let's go back to Yahoo Finance here. And we're also voice connected in the Discord. So far, that's not really doing much for us, but we're doing it anyway at the request of many of you. So let's go to Yahoo Finance and we will share what our favorite funds did today. Okay, here we go. So let's look at SQY for starters. So SQY was up 29 cents today, which is amazing. After the dividend that it paid out, it's amazing that it's up so far. So it went public October 9th, 1896. We're obviously wishing we bought in now, right? It was at a low of 17.79. By the way, the price that I said for the 562 shares would have been the October 23rd lows for both SQY and Square, or SQ, which is block. So it went from 17 all the way to 26 actually. So it was almost like a $9, well, closer to $8 of a gain, but just phenomenal, really. And the expense ratio is the same for all of these. But really, after the dividend, so obviously the dividend was paid out over here. So we had this huge run up here after the dividend was announced. This is what happens. And Jay actually asked me about this. That's why I like to say interviewing is a two-way street. Jay was asking, why do you guys think on our podcast? He said, why do you guys think that there's this big run up and then this big pullback, like right when the dividend is announced, and then we have the ex dividend? That's because people are getting in trying to get the dividend and thinking they're going to like double dip or something. So after the dividend was paid out, we dropped by actually more than or wait, let's see, we were at 25.93. So that was like pretty much exactly what the dividend was. And then we've recovered actually from the 23.75. We've made some of it back already, which that's really cool when that happens in these dividend funds. But anyway, so there's SQY, and then we'll look at Square today. We'll look at how closely they performed. So block, I need to call it by its proper name, block. So we were up 1.21% in the SQY, and then in the SQ we were up 1.47. So block stock actually outperformed the underlying yield max ETF. So we were up $1.01, we were up to 69.57. Year to date, we're actually flat because we started at 68.99 a share at the start of the year. We went up all the way up to 84 and then dropped again, then came back up to like 78, and then we dropped to 40, and then we've actually come back. We've almost made a 100% gain in a relatively short period of time. So anyway, that's where we are in terms of the SQY and the actual stock. Let's see. Blake says, as far as I can tell, SQY doesn't have an options market. Oh, that's a bummer, but we could still do it on Square stock anyway. So we'll look at example options trades. Like I said, I'm going to do another workshop on leap options on the major indexes going into the new year. So you all are going to see a lot more from me before the end of the year. So thank you all for tuning in. Like, comment, and subscribe if you haven't already. And we will see you all very soon. Like I say, sooner than you all think. Take care.